please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, today one of the dominant discussions is going to be LIC purchasing probably a 30% stake in IDBI Bank. We don't yet know what the numbers could be. The important trigger today to the government's thinking will come from what IRDA does, the insurance regulator, meeting at 11 a.m. To consider and maybe approve or disapprove this tie-up or this purchase. We spoke to a bunch of experts on this issue and people who would know. We spoke to M. Damodaran, the former chairman of both IDBI Bank and the former chairman of SEBI. We also spoke with Mr. R. Gopalan, a former Department of Economic Affairs secretary, as well as to Janmejaya Sinha of BCG, a long-time banking veteran, to check out whether this deal benefits anyone at all. Just listening to what Mr. Damodaran, Gopalan and Janmejaya Sinha had to say.
If LIC wants a bank, let it increase its shares in Corporation Bank by getting IRDA approval. It already has investment in Corporation Bank. It's the biggest investor for a long time after the government. Go and pick up that, and that bank isn't doing terribly well, hasn't been doing well for quite some time. So to say that LIC will get this bank, which is going to be great for LIC, I think you're actually stretching the management bandwidth of LIC, not providing enough management bandwidth to the IDBI Bank, solving none of its problems, whether of personnel or asset quality or anything at all. And the government makes some money in the process. What experience do they have in running the bank? Has their presence in the Corporation Bank, I think they're very large shareholders, has it made Corporation Bank a shining example for the banking industry in India? So I'm not faulting them. That's not their area of expertise. So bring in somebody who can run the bank. Bring in somebody who is committed, challenge the person, compensate the person adequately, give him or her at least 7-8 years, and say, take the ball and run. And I'm sure that you can find such people in India. Military credibility will be compromised, and it will be very difficult to recover every time somebody wants an exemption if you are required to give. And this, as was pointed out, all three regulators, in fact, need to grant exemptions, which is a terrible thing to happen. I mean, a single regulator giving an exemption in a single case is bad enough. But this is going to give rise to expectations from everyone that, should an exemption be required at some point of time, you only have to ask for it.
With 100 crore equity LIC under government guarantee, with its solvency ratio being one of the lowest among the life insurers in the country, are you doing the right thing to LIC by asking them to buy another very equally sad case of IDBI Bank?
When we want to really look at how to get this system to work, I believe India could be the model for the banking world if you had government is a majority, not a majority owner, but the largest owner. Having 26% stake with everyone else having whatever 5 or 10% stake, so that you did not allow the bad private sector influences to come in, and you got rid of the governance issues and the HR issues which are there right now. That's the way to start building a system.
Okay, so Lata, you had this conversation. I mean, what was the key takeaway from that?
Well, the takeaway quite clearly is that this is going to be a threat to financial sector stability. Yeah. And even with respect to an IDBI investor, why will LIC be better placed to solve the bad bank, the bad loan problems? The fact that Sriram has been appointed as the managing director, I think, is a positive sign. Sriram definitely is a banker of unimpeachable credentials. He has seen a bigger bank, SBI, and same problems because both of them have lent to the same set of companies. Yeah. So in that sense, there's continuity. Sriram is perhaps the only positive sign that has happened to IDBI Bank. For the last 2 years, they've had so many changes in managing directors. And then you had this case of CBI coming and putting a charge sheet on 15 former IDBI bankers and 3 of their independent directors. How much more can you ruin the morale of a bank? Yeah. So the first positive step they are taking is to get a man like Sriram on board. But with these regular charge sheets coming, I don't know how much nerve any managing director will have. The other crucial point we have to look at it is LIC going to take 51% or 40%? Yash just told us it's 40%. So they already have 11%. They will take 30 more and make it 41, in which case they are not majority. But I don't know if that makes a seminal difference. Even if they become 51, we don't know whether there will be a great independence in appointing managing directors, because the managing director is Sriram anyway. It's not market compensation. It doesn't become a private bank, so to speak, away from government. So I don't know what big difference it's going to make at all at this point in time. And therefore, this 10% rally in IDBI Bank, for me, the only positive thing that's happened so far is Sriram has been made to head. And if he's given 5 years, then there is some level of stability in IDBI Bank. But otherwise, why this 11%? I mean, what is changing? Is it going to be any easier to reduce that 28%? I don't think so. But anyway, we will be discussing this issue at length today after the IRDA meeting.
Okay, well, let's do one thing. Let's talk about the new listing. Talwalkar's has listed their gym business and named it Talwalkar's Lifestyle. Prashant Talwalkar, the promoter, director and MD, and Anand Gawande, the promoter of Talwalkar Lifestyles, joins us now to talk about that. Gentlemen, morning to both of you. Anand, I want to start with you. There's been so much confusion ever since you made this announcement. If retail investors have been constantly writing to us, asking us about what really is going to get listed, what's going to be left behind. And the reason for this confusion has been because you listed the lifestyle business and you named it Better Value Fitness. Today you listed the fitness business and named it Lifestyle. Once both would have gotten listed, that is now, you will have a name swap. Why was there so much confusion?
Good morning, Sonia, Lata. I think Anuj is also on the program. Thank you for taking us in on the listing day. Yeah, I'll straight actually answer the question in 2 or 3 parts. It may take a couple of minutes so that all the investors or non-investors and the news channel can get a clarification. As you know, we had one consolidated company, Talwalkar's Better Value Fitness, which went for a legal demerger about 14 or 15 months back, November, December 2016. The process goes through a whole range of things like shareholders, creditors, NCLT. NCLT is like a high court, Sonia. So when the NCLT wanted to pass its final order in February 2018, they told us that the authority of the change of name is with ROC and not with them. So just for information of shareholders and viewers, we had given the name change, Sonia, to the NCLT people when it went to NCLT. And by the way, all of this has been regularly informed to stock exchanges by us. So it's not as if any of this information has been withheld, because there is no interest which the promoters, the company or any of us have in withholding this information. By creating confusion, you only start decreasing the standards of corporate governance. I do not think that we stand for that. So when the NCLT order was passed, the honorable judge said that this change of name can only happen when both the companies are together listed, which is as of today. So on Monday, we will be moving both the shareholders for the change of name. But coming back to the event in February, the moment we got the NCLT order, it was immediately downloaded on the BSE and NSE site. It was also put onto our site, Sonia. On the day of delisting or on the day of demerger, which is 28 or 27 March 2018, there was further confusion because people felt that the company which continued to be listed is the gym company and not the lifestyle company, correct?
Correct.
So 2 days before that, Lata, we had given a notification to the exchange, which is BSE and NSE, which is available for all of the people to see, which specifically stated that the lifestyle company is a gym company and the gym company is a lifestyle company. On the first day of listing, because there was confusion, we were getting phone calls from shareholders, including from your channel. We put a further clarification that evening on a pro bono basis, saying that the lifestyle company, which is right now presently listed, or gym company is a lifestyle company, and the lifestyle company, which is now today listed, will become the gym company. So this was done immediately after that. Post that, just to continue the process, on 11th May, the results of the listed company okay, were declared, and when they were declared, we put the 44 steps which were complied by us for the purpose of demerger, stating each of these steps all the way, Sonia, Lata and Anuj. So we would like to confirm and clarify that there was no interest. The promoters, the company, the management employee, none of the people have any interest in creating any kind of disillusionment. No promoter gets any happiness out of creating a situation of uncertainty in the marketplace, if at all. We want people to know what's happening.
All right, I could have just asked you whether you really, Anand, had to go through all this at all, and whether, the unified stock was a fine way to participate in your growth. But anyway...
Now that I can come to your channel, that I can come to your studio
let that wait.
And chat with you
further. No, Anand, let that wait, because we're running out of time on the show.
Sure.
So I just want Prashant in to tell us, the growth prospects of both units.
Please.
What kind of, revenue growth can you project for both these channels, for both the entities?
First of all, thank you very much, all of you, and I really appreciate the patience of all the investors waiting for this day. Let me assure you that the growth which we have been doing for so long and so many years will definitely continue. This is a new opportunity given to us today, more so. And I'm very, very optimistic that as we have been opening 20 and 30 clubs every year, we'll continue doing that process for sure. And as you can see, that has always been our base of so many verticals which has grown after that. So I don't think there should be any doubt in anyone's mind. The growth and you have seen the past years, our EBITDA and the revenue reflections. I'm very gung-ho about what's going to come in the future. The future growth is going to be fabulous.
Okay, Anant, can you just leave us with some numbers? I mean, because we have been trying to sort of get through to you for a very long time, and now that we have you with us, for the gym business that's listed, what could the growth look like in FY19, and what will the financials be?
Sure. So, Sonia, to start with, one is I always enjoyed coming to your channel, and I had stated the day of listing I will be on your channel, which I am today. Okay. So, as far as we are concerned, the consolidated growth of the company till December was about 22-23%. The March quarter results, which is the entire year results of the gym company, we will immediately on Monday or Tuesday put stock exchange notice, and will declare the results immediately after that. We believe that the growth momentum for the current year will be in that range, and as Prashant rightly said, we have been opening about 30 to 50 gyms every year. We are the market leader in the gym category. Talwalkar's brand is the #1 brand. Power World brand is now the #2 brand in India, which means the two top brands are available with us. So we believe that growth of about 20-25% per annum, a ROC of between 16 to 19% over the next 2 years is what we would like to aim at. And the last and the most important thing is the net cash flow positive, which we are constantly guided in the gym company.
Okay. Just one more question, Anant, on the point that you were making earlier about the disclosures that you made to exchanges repeatedly. Why did you not choose to come and talk to media about it? Because there's been significant confusion, wealth erosion as well. As you said, a lot of investors reached out to you. What was the reason for, lack of communication, apart from the disclosures that you made to the exchanges?
Let me ask you a different question, Sonia. I mean, I have no problem coming with the channel. I'm on the channel today also, and I'm trying to answer the questions as candidly as possible. But when disclosures have been made to BSE and SC, and each and every shareholder or non-shareholder has access to that information otherwise, okay? Whenever anybody has called me, my company secretary, my CFO, Prashant, each and every phone call has been answered by us. If you can ask anybody whom you would know well, our answer is, when we come to media, we should be coming with something which is concrete and right. One of the company was unlisted, and we did not want to be on the wrong end of compliances. As you know, we were having NCLT, we have SEBI, we have NSE, and we have BSE. If we had done anything wrong in terms of compliances, it would have only delayed the process of demerger and listing further and created some complication which would have hurt the shareholders and promoters in the longer term. That is the only reason, and no other reason whatsoever, because what we are stating as a fact today is all available on our website and BSE, NSE to see. So we are not stating we are doing it today. We have done it on those days, Sonia and Lata.
Okay, let's not use the word Talwalkar Fitness and Talwalkar Lifestyle because it's terribly confusing now since the names will eventually get swapped.
Absolutely,
so just tell us how
we will clear that confusion.
No, don't get into it at all because that's, just repeating ourselves. Just tell us what will be the revenue growth for each of these items. Let us call it the gym business and the non-gym business. What will be the revenue growth for each of them and what will be the debt sharing between the two?
Yeah, so just to explain to you, one of the company's results are already in the public domain. The other will be in the public domain in the next 10 days. The debt has been split between the gym company and the lifestyle company as 70% and 30%. Okay, the revenue split will be 80% and 20%. But to get into specific figures, if last year we had done a profit after tax of about 66 crore and assume that we grow at a particular percentage in the range of 20% for the current year, then the overall profit figure, Lata, which is 80 crore or thereabouts or 82 crore, will be split in the ratio of about 75% and 25% between the gym company and the lifestyle company. So I'm being as clear as I can be. In the gym company, so that I add further, we expect the growth, as Prashant rightly said, by setting up 30 to 40 gyms every year, but completely staying cash flow positive. In the lifestyle business, there are a lot of smaller businesses, as you are aware of, like yoga, like Zumba, like the David Lloyd Club. Okay, all of those businesses combined, we may see a certain surge in revenue in the current year because some of them are opening businesses, and then it will steady up at about 25-30%.
Okay, so finally, this 70-30 split that you said for the debt between gym and lifestyle, what's the absolute debt figure at the moment?
500 crore.
Okay.
Our debt equity ratio, Sonia, is 0.7 is 0.65 is to 1.
Okay.
We are double rated. So for
all right. Actually, I'm out of time. Prashant, thank you very much indeed for joining us with those details.
Thank you both of you, and thanks all of you.
Okay. All right. We have to wind up on Bazaar. Taken a little more time from Chartbusters, but really the market's in a fairly fine fettle. So a lot of, I guess, long ideas waiting for you on Chartbusters in a minute.